The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, kicking off the new week of trade on Monday, we could call it risk off to firm as we got things wrapped up. A little bit of strength in front month soybeans, bean oil, seeing a little bit of green on the screen in the oat market too. Those were the winners. Otherwise, everything else was kind of in the red and just trading with a lot of uneasiness, it felt like. Joining us here today to discuss the markets as we jump into a new week, we welcome in our good friend John Heinberg with Total Farm Marketing. John, good to catch up with you, sir, and hope you had a good weekend. These markets felt like they just kind of tiptoeing into this new week here with some of that outside market concern still on the table, John.
Yeah, today was one of those days I just gave you a very perplexed look right there, because that's really how it was. I just kind of figure things out today, at least what's leading what's going where. I mean, you woke up at 2 o'clock in the morning, looked at the markets. We were just getting smashed across the board. Stocks down hard, crude oil down hard, double-digit losses in beans, corn down solidly, and wheat down solidly. And then as we woke up and got things going on the day, some of the buyers stepped in. Now you got a stock market trading 200 plus higher, almost 1,000-point trading range there today. And just looked at crude oil a few minutes ago, and boom, it's back in the positive territory. So maybe we're seeing some correction there. So it's just really was a kind of a day that I'm trying to figure out what things wanted to do. We've got some seasonals we're looking at here in the bean market, and there's a window where we're supposed to be positive more on the July bean. Also same thing with December corn. This is a window we typically start seeing some strength here after the acre reported to the first part of till about the first Father's Day weekend is usually what I always target for. So kind of a choppy day overall, just trying to figure out what the trends were.
Well, and thinking about some of those things you mentioned, crude oil again hitting new 15-month lows overnight and then rallying, stock market down hard, then rallying. I wonder, we know that there's a lot of banking worry out there. We've been talking about that. There's worry, wondering what the Federal Reserve is going to do this week. That seems to be permeating through this market. Does it feel like that maybe the overnight we traded some of the initial bearishness, headline worries, and then we kind of settled into Monday and realized, okay, let's take a step back and pause. Maybe some money flow kind of came back into the broader commodity trade on Monday?
That's a good possibility. Again, overnight trade, especially Sunday night trade, is really almost, I don't want to say a waste of time, but in terms of getting a good picture where the market's going to be during the day, it kind of is. You just got a lot of reaction, thin trade, and markets move quickly because of the lack of players in the marketplace overall. Then we get to the day-to-day, and we actually, then we start thinking about the fundamentals. Okay, we had export inspections today. Pretty good number for beans here for this time of year. Corn, another solid number, trying to catch up to where it needs to be. So that helps support corn market a little bit. Obviously we had the cattle on feed numbers to digest from Friday, and how that market's handling things. So again, though, that overnight trade, as much as you like it or hate it or wherever it is, it can be very, very frustrating, because a lot of times that doesn't truly give us a reflection of what today should be, especially that move that crude oil put in, pushing well below $65 a barrel, and now finishing up the day pushing closer to 68. So I classify that as a pretty good reversal, and maybe that leads us to a little short covering, and that'll help out the whole commodity space.
Well, you mentioned those export inspections, corn, beans, both good numbers there on Monday. So let's dive into this corn market a little bit more first. You mentioned watching some of those seasonals, December corn. It's been kind of pushed down here to this 560 level. I mean, you look at these charts, John, you look at the general market sentiment. What are you watching for in this corn trade?
Right now for corn, it's that demand kick. Okay, we've had China came into the market, picked up about 83 million bushels last week. Needed. Okay, the market was looking for that. It came there. Now we need another round. And there's rumors out there that they're looking for more. We'll see if that comes comes together or not. But, what type of a base did we build? We kind of went down, focused on July, poked through the $6 handle, rallied above that. Even today's price action, we were down a couple cents at the end of the day. We went down, we tested a moving average, we rallied off the lows, finished near the top of the trading range today. So maybe there's just a little bit of buying support down there, and that's kind of being triggered by some potential demand, overall. We go look at December futures, where we get down to the 550 handle, and that can kind of seem to bring some buying in. Now, neither one of the charts is out of the woods in terms of downside potential. I think what's going on in wheat will be a big factor in that. Also had to digest the Ukrainian grain deal getting supposedly taken care of today for at least 60 days. We'll see. But all those things are things that weighed on the corn market. So I actually thought the corn market price action has been pretty good lately, especially triggered by that demand. There's some whispers out there now. If we do see some improved demand, that, hey, the USDA may have undershot that target and may have to add a little bit back onto the demand pile. So, that'll be something we'll find down the road. But it would definitely be nice to see us raise some of that, bring those demand numbers back up, bring carry out back down, and kind of break this trend of growing supplies.
Well, I know in soybeans here, John, you mentioned export inspections, a pretty solid number there, time of year where we typically see our exports start to take a back seat to South America. I look at soybeans, same question there. What are you watching chart-wise? It looked like some spread action between old and new crop on Monday. Thinking new crop November, at one point breaking below that 13 handle in the overnight, settling up 1309. So what's your thoughts on this soy complex right now?
Obviously that big move in the front end spreads here, the bull spreading the old crop over new, that just tells us there's something going on the demand front here again. We saw export inspections, 700,000 tons this week. Like I said, solid number for this time of year, solid number given the amount of beans that we have available to us. Then we've seen bean oil turn around a little bit today. So that brought a little bit of support to the market. Obviously, crude closing higher today will help that out as well, probably on tomorrow's session. So that just tells us that somebody's looking for beans here. When you start seeing, 10-cent jumps in May versus those back months, or a 5-cent jump in July versus those back months, it just means this market's very, very concerned about front end supplies here. We've had a pretty good pullback in here, and there's probably a window in this time frame that if somebody's moved some beans out, moved them at some better levels earlier in the winter, and you want to keep a little bit of a weather card in, something for the fall, this might be that one that you want to pick up a little reownership on some bushels just because of the break we've had and the tight supply picture that's out there, because it wouldn't take much for this market to really get moving again. Now, on the flip side, I continue to watch what's going on in South America. We continue to get a little bit of business because of the lack of speed down there. It takes about 30 days or so for a boat to get loaded and get out of there. So people need beans sooner, they come to us. We still have them here. That's something, but still have to keep a watch on. We're still watching basis levels and premium levels just tumble in Brazil, just basically saying we've got too many beans here and we got to get them out. And that might just have a little bit of a longer tail down into the spring, than we want to see in terms of the soybean market.
With South America as well, one other thought I want to ask you about, safrinha corn planting. We know we're a little delayed with the rains we've seen in Brazil, but it seems like that crop is getting in. Is the market, are you hearing anything, your sources? Is there worry about some of the delay with planting in that safrinha corn crop?
We're hearing some whispers of maybe some acres getting shifted out of corn and into possibly wheat, maybe even just going back into pasture for a little while, just given some of the weather conditions that are down there. Again, obviously there's a lot of costs. The corn side of the equation is really just the frosting on the cake in terms of their agricultural market. It's all about the soybeans. Corn is just something we have to grow when we got the weather time frame to do it. That's why they don't put a lot of inputs into it. If things are expensive on the input front, they're not going to plant. Plus also the concern, obviously, with some of this crop, obviously being planted well past the perfect dates or those target dates. And there's going to be some concerns regarding it finishing out. And so producers don't want to put the risk of the cost into it if that crop might not be there. So that might be something we need to watch. It's going to be a longer term developing story in terms of what they get planted in terms of hectares, as well as where we are in final production. And that could open up some demand window too late in the season if that safrinha crop isn't as big as they think it's going to be. That was one of the things we heard last week. While China was busy buying U.S. corn here, they were stepping into the Brazilian market as well, locking in corn for that late summer delivery window. And if there's some reason that's not there, they're going to come right back to U.S. shores because we'll have the only bushels around.
On the wheat side, you brought up the Ukraine grain initiative supposedly getting extended 120 days. Russia's saying it's still only going to view this as a 60-day extension, but nevertheless, deal getting extended for a period of time here. That's the only thing that pointed to this wheat market being down a little bit to me on the day Monday, because the dollar was lower. You'd think lower dollar, higher wheat market. Really wasn't the case. What did you see there?
I think the grain deal was part of the situation today, actually getting maybe some formal announcement, but I don't think I've ever seen a deal be more complete and not complete at the same time from at least what the headlines are putting out there. So we got to deal with this on the 18th of May when that time frame runs out the end of the 60 days. The other side of it too, you got to look at the commodity sector in general. It's struggling a little bit right now with the crude oil pullback and just seeing some money flow out of commodity space. And I think that may have been part of it today as well, as you saw that stock market reverse over. There's whispers that the Fed may not do anything at their meeting this week. We'll see. I'll be kind of surprised if that's the case, but maybe we saw some money move out. Some of these commodity indexes, like the Bloomberg commodity indexes, they're breaking to the lows for the year, which is obviously influenced heavily by the oil trade. But that's just a trend. Maybe we're seeing some money continue to move to the sidelines. Again, our commitment of traders reports are still messed up and still delayed, but we've seen the long position in corn basically get eliminated. We got wheat almost over 100,000 contracts on the short side. You got cattle was at a large long position. It's starting to get liquidated here, and obviously what's been happening to the hog market just continues to push down as that money's been pouring into the short side of that market.
We are having a conversation here today with John Heinberg of Total Farm Marketing. John, let's jump over into that livestock trade as we take a look at things there. Cattle first. Cattle on feed report out Friday afternoon. Pretty much looked like that came in as expected. Still bullish numbers. And, initially Monday morning we traded that, it felt like, for a short period, but then we just kind of settled back and just traded steady firm on the day is what it felt like. What is your assessment of the trade action we saw across cattle on Monday?
Yeah, the cattle on feed numbers came through, and again, we're expecting to see some negative, some continued tightening of that supply, and sure enough, it did get there again with those numbers coming in. Overall, we're still watching, those placements, 6 months in a row, negative placements. Again, the cattle numbers coming down at a fairly steady clip at this time frame. But the problem is we're starting to see some general money flow out of the cattle market here. Actually, the June contract today put a low in for 2023, taking out the low from January today. So that's a little bit disappointing, but it looks just like a money flow thing at this time frame. We've hit our winter peak. Now we're going to a low here in the springtime, and we'll possibly push to our summer high when maybe that grilling demand kicks in. Again, to me, it's going to probably turn this market into a bit of a value, especially for the longer term. You go look at those numbers and on those placements, there's not many cattle coming down the pipeline in the third and fourth quarter. And those continue to be supported today. Maybe the only little wrinkle that was disappointing was the fact that the cattle on feed front was a little bit heavier than the market anticipated. But realistically, though, we're down about 500,000 head from last year right now in the lots, and it's pretty much a week of kill in that regard. Last week's kill was about 623,000. So the cattle numbers are still tight, but like in all situations, seasonally the market says we go down here. We put that high in for cash. We were weaker in cash trade last week. It's just a window where, because of also what's going on in those outside markets, somebody wants to move to the sidelines, not worrying about the fundamentals. It's more about the technicals.
Well, and you mentioned last week's cash trade, about $1 lower in live trade and dress trade. I have to wonder this week if we at least can maybe recover that dollar in feedlot country, just with the way that cattle on feed report was on Friday, John.
That wouldn't surprise me. And now the market's also starting to move away from that April price a little bit as we're getting closer and closer to the expiration date. And, you're looking at June at 155, cash trade 164. It's starting to be a pretty big discount there. And like I said, to me, this market could get itself a bit undervalued, especially if June falls back a little bit more. I'll probably use that opportunity to talk with some producers that moved some cattle and got some good prices. But in case things get crazy, might be a great opportunity to put a little bit of ownership over top of some of those, especially with the time frames, not a lot of cost on some of those call options, just in case this thing wants to run right back through the highs, because all of a sudden the demand picture can change. Spring grilling demand could heat up quickly, and next thing you know, they're going to be going, hey, we have a cattle here, and this market is ready to run and go back and challenge those highs.
I was going to say, yeah, it feels like an opportunity here as we kind of pull back just a hair, maybe get ready for a leg up to lock in some different strategies in this cattle market. Hogs on the other side of the equation, I still cannot understand what this hog market is doing. Just feels like more technical weakness there possibly on Monday. What's your thoughts on hogs, John?
Well, the biggest thing we're running into is hog slaughter is running ahead of last year's pace right now. And, the hog numbers are still, ahead of what the USDA maybe was forecasting here. And that's just keeping some weight on the cash market. Now we throw in the technical side. Okay, that's purely what this is at this stage. You got shorts pushing this market down very aggressively. Today we, thought maybe that April contract would get a little footing, and new lows. Here we go again. And now we're running at a very big discount to the cash market here in terms of that April contract. So that should hopefully get us a little bit of footing with expiration just right around the corner. But it's just coming down to the concern that we just have too many hogs in the front run here. And then we're also watching where the demand is in terms of how to get this product to move. Now, again, it's another market's getting overdone here, at least to the downside. We'll probably get one heck of a correction, but I'm not the one to step in front of this market at this time frame, because every time you seem like you do, we just find a gear for another leg lower, and push these prices to levels that we weren't really expecting at this time in this window.
A lot of concern about African swine fever reemerging in China as well. I wonder, John, is that maybe still a wait and see approach with how it could impact this hog market? I'd have to think it would be bullish for our hog market, wouldn't it?
It will be, as long as demand shows up. Maybe here in the short term, if that is the case, we're probably seeing a lot of liquidation of herds. They'll just move them out at any age and any size just to get the pork out of there before they become diseased or something of that impact. So I got to take a look at Chinese pork prices. Maybe that's some of what's going on here too, is just that anticipation that, hey, they're going to have plenty of supply. But the last couple of weeks, or this last week, export sales were very good for pork, and when noticeable improvement over previous weeks. China was in the export list at number 3 with about 5,000 metric tons. So that's going to be a wait and see in my mind how severe things are, and truly do they come to us in terms of that demand side of the equation. The other thing kind of going on too, just got to keep an eye on in general when it comes to China. The president from Brazil, as well as the large delegations in China right now, meeting with them, continuing to solidify ties with that country. That may be something coming in some of these commodity markets, as well as, Brazil is obviously going to be a competitor, where it's in the grain side or even the livestock side, especially more on the beef factor. But it's still there, and it could be another source that's always going to compete with us on these export markets.
John, how about that dairy trade before we let you go? Any thoughts there as we kick off the week?
We had a pretty good turn back in this market. Cheese trade really jumped up there. I don't know if that was Final Four, cheese pizza buy-in at this time frame, because a lot of stock comes into play for that. But I think we had some export business step into that cheese market. Now we kind of looks like we peaked it back out. We nosed up around that $19 handle, which a few weeks ago producers were hoping that would get there. Again, to kind of watch that trend in the cheese trade, but it feels like at least maybe we got ourselves a bit of a range. It's a big range, 19 on top to 17.50 on the bottom side. Right now, we're definitely at the top of that range.
John, any other final thoughts for us real quick before we let you go?
There's going to be a lot of volatility this week, especially with the Fed meeting. What's going on with the bank situation? Again, maybe the market's optimistic when I talk about that. When I'm talking the equity markets, that the Fed might actually even give us a rate cut to cool things, cool things off a little bit in terms of some of the negative vibe that's out there. Mm-hmm. But at the same time, they're sticking to their guns. So I'll tell you one thing: if they come out this week and they still raise interest rates, we could see a major hit in that equities market that might be pricing in, a little bit of free money here coming at them, and it may not be there. A lot of moving pieces. Again, we talked about it before, how quickly things can fall apart. Take advantage of strength, build that defense, get that risk managed underneath your bushels, your pounds, whatever you got to deal with, because there's a lot of opportunity for any black swan events that could really hurt this market.
John, if folks want some advice, they can reach out to you there at Total Farm Marketing, I know, very easily. What's the best way to get a hold of you?
Sure, love chat with me anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget about our website of ours, totalfarmmarketing.com. A lot of great information for producers out there. Also, too, we're kind of wrapping up the meeting season, but if there's ever an opportunity for one of our representatives come out and present at one of your meetings, we'd love to have that opportunity as well. Feel free to give us a call, talk markets, or like I said, if you want to bring us out, love to come visit you.
Fantastic stuff as always. John Heinberg with Total Farm Marketing. Have a great week, sir. We will talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.